What's good, traders? Today we're going to be talking about liquidity. Liquidity is one of the most important components when it comes to my system because this is what gives me that opening, that entry to actually go and look for a trade. So this is one of the most important videos. I know the first few videos were a little bit boring. We're talking about the fundamentals, the basics, but they're also important. But this video here is the most important because this is what's going to start you off to actually start looking at the markets and actually see trades getting put in place and actually see how the market even moves, because without the markets or without the liquidity, market doesn't really like to move. So let's get right into the charts and explain to you exactly what liquidity is and where you can find them so that you can become a pro at noticing where this is, so that then you can start scaling in and look deeper into the markets and get entry points. So like I said, this is a very, very important video. Get your books out, get your notes out. Let's take some notes. So first and foremost, what is liquidity? Is as simple as this. Liquidity is resting orders. Okay, resting orders. What is resting orders? Now, when you press a buy, that is an order. When you press a sell, that is an order. So every time you press a buy or a sell, those are orders that are getting taken into place for you to be in the markets. And where you put your stop loss are usually the opposite orders. So let's say I sell. Let's say I sold right here. Let me just draw the markets real quick. Let's say I sold right here and I kept my stop loss right here. This would be a sell order, but then over here would be a buy order. Why would this be a buy order? Because this is where my stop loss is, and when we sell, we have to now buy what we sold. And so that's basically what resting orders are. Now, how do we see these in the markets? Now, we all know, I don't think I've covered this yesterday. I kind of missed it out, but we'll talk about it today. We all know how the markets move, right? If we're on an uptrend, we create higher highs and higher lows. Kind of mentioned it yesterday, but I didn't really show you guys. And then if we're going on a downtrend, we're creating lower lows. Please don't look at my drawing. That's terrible. Let me actually draw that again. We're creating lower lows and lower highs, right? That is the core concept of the markets. That is the bare basics of the markets. And most traders that trade know these two kind of diagrams when it comes to the markets. However, what we need to understand is liquidity and resting orders. So if we're going on an uptrend, we know that most traders are looking to buy. And so what happens is we create a high. As soon as price decides to go up and break and go above these highs, most people are going to buy. Okay, that's meant to be a B, by the way. And when most people buy, they're expecting the market to go even higher, because that is the concept of high highs and high lows. And so what would happen is they would have buys right here, and they would expect the market to go up, and predominantly just they could hold it or whatever they want to do, they can do. But they're looking for buys here. So you can see over here already, there's going to be a lot of buy orders around this area. That is the reason why the market decides to push up. That is why the market decides to go higher. Okay, and then again over here, a lot of people are going to be looking for buys. As soon as price goes above the area, we get more buy orders. Okay, now it's the same thing. Even though we're on an uptrend, it's the same thing when we are in a uptrend. We have buy orders over here. Again, that's meant to be a B. But we also have sell orders over here. Okay, why do we have sell orders over here? Because a lot of people are trying to sell, or they're expecting the markets to go down in this area when the market is going down. Now, there is no right or wrong answer. Okay, people want to sell in an uptrend, people want to buy on an uptrend. It just depends on how you see the markets. A lot of people see the markets differently, and that's why we have sellers at the bottom and buyers at the top. Okay, however, this actually gives, when we're on an uptrend, this actually gives a reason for buyers to have more orders in place. And I'll explain to you why. Because when we have sellers right here, where would they keep their stop loss? They will keep their stop loss just above these highs. That's the rule that they get taught. So what happens when they have their stop loss above here? That's more buy orders. Therefore, we would have buyers over here, plus the sellers have their buy orders over here. So we now have more buy orders, right? Let's say we just have, yeah, one more right here. Now we have 2 buy orders in this area and then 1 sell order. And that's why the market continues to go up, because there's more buyers than sellers. And so that is exactly why the market is on its uptrend. Exactly when we're going down, it's pretty much the same thing. If we're going down, we obviously have sellers every time the market. This is a really bad diagram, by the way. But every time we go down, there's sellers. Now, whenever, obviously, when we break here, there's sellers. Now, again, when we're going up, there are buyers, but where do buyers keep their stop loss? Above here. That gives it more selling orders. That's why the market decides to go in that direction. Now, don't just go onto the charts right now and start looking for price going above highs and start buying, because I'm explaining to you in a second, but that is not the way you want to trade. Even though it looks as simple as that, like, okay, every time price goes above, just create buys. Every time price goes above, just press buy. I know that seems so simple, but that's not the way you should be trading. That's not the way we're going to trade. We just need to understand that that is what liquidity is. Liquidity is just resting orders, and it helps the market move in certain directions. Now, if there are more orders in place, let's say more buy orders, guess where the market's going to be going? It's going to be going up. If there's more sell orders, guess where the market's going to be going? It's going to be going down. Yeah, the market doesn't like to go in one direction in one go. Like I said yesterday, it likes to go up and down to give buyers and sellers opportunity. Now, you might have heard of the concept seller's trap, or the market likes to trap you. That is basically liquidity put in place. Okay, so if I had to just quickly show you right here, let me just show you like this. Okay, let's say we had buyers over here. Okay, let me actually do this. Let's say we had buyers over here. We had buy orders right here. And then we had another buy orders right here. Okay. And then we have sell orders over here. Let me actually and then sell orders right here. Okay. This is what happens in the markets. Okay. And this is why liquidity is so important, because it actually helps us when it comes to direction. It helps us with targets. It helps us exactly to know where the market's going. Now, we had buy orders right here, buy orders right here. A lot of people are going to be buying when price goes above this area, these highs, right? But then again, a lot of people are going to be selling when it comes to these areas right here. Now, as soon as price goes down and hits this area, right, these sell orders, again, where would buyers put their stop loss? Where the sell orders are. That's where buyers would keep their stop loss. So as soon as price goes down, crashes down into the markets, what happens? These sell orders get activated, and that's what causes the market to keep going down and keep smacking these sell orders, because the sell orders get activated, meaning that there's no more buy orders. And again, this is what traps the markets. Okay. And then what happens? Just an example, what would happen is it would smack these sell orders, and then it could possibly just go right back up again. What has it done? It's now taken out the buy orders, right, from this move, and it's taken out the sell orders from this move. And that's exactly what the market wants to do. The market wants to take out the buy orders and the sell orders so that retail traders like us lose our money, and then the big move comes in, the big boys comes in, and it moves in the direction it needs to go in, and then it decides to say, hey, look, we're going up. We just had to stop all of you guys out, so you guys don't make money, but we're about to make money. And boom, it goes in the direction, and then it just starts flying up. And you'll probably notice that in the markets, especially yesterday when you're drawing out the highs and lows, you probably noticed that in the markets that the market likes to sometimes reverse once it's hit a certain liquidity level, right? As soon as price hits one of these highs or lows, it's going to then reverse at that point. And that's what we're looking for. We're looking for these big boy moves right here. We don't want these little boy moves. We don't want these little tit for tat moves. What we're looking for is them big boy moves, the moves that will literally make us money, rather than just being weird and stopping us out every time we're trying to trade. Okay, so when you start to place trades, or if you've placed trades before, you're going to notice that you probably get stopped out and the market goes in your directions because you are part of liquidity. Okay, that's why it's so important to understand liquidity. So if I quickly show you an example, right? When it comes to the markets, let me actually draw it out nicely so you can actually see. Okay, so for example, let's say the market is going down, up, down, and then boom, like this. What has price done? Well, we had buyers over here, right? So buyers over here, buy orders in this area. We had sell orders in this area right here, right? Buyers, where were their stop loss? Well, their stop loss was here. Sellers, where was their stop loss? Well, their stop loss was here. What happened? Stop loss. Stop orders get taken out. Boom, no more sellers. Buy orders get stopped out. No more buyers. What happens? Market goes in that direction. And this is what we're looking for in the markets. This is what we want to see in the markets. We want to see that all the orders have been shut down and then we get this big move. That's what we're looking for when it comes to the markets. So when we look at the charts, what we're looking for is highs and lows. That is where the resting orders are, highs and lows. And what we're trying to see is we're trying to see these highs and lows, one of these levels, price to hit it, tap into it, and then price goes in the other direction. And then that's what we get the reversal. That's what we're looking for when it comes to liquidity. And that's what's going to help us make a lot of money in the markets. So let me show you, okay? So for example, over here, this is actually a really, really good example. We had a high right here and a low right here. Okay, look what price does. Price decides to, okay, we have, buy orders coming in. Okay, so a lot of buyers are going to be buying right here. A lot of buyers are going to be buying, but where are the buyers? Where are the buyers' stop loss? Where would buyers put their stop loss? Well, they're going to put their stop loss below these lows, which is, what everyone does. And so what's going to happen? Price then goes down, hits them, cancels out all these orders, takes out all these early buyers, let's say, and then what it does, it shows people, okay, we're going to sell. So what's going to happen? People are going to start selling. People are going to start selling because look, price is going down. Prices hit this level, therefore sell orders are in place. And so where would sellers keep their stop loss? Well, sellers will keep their stop loss above these highs. If sellers keep their stop loss above these highs, what's going to happen? Well, the market wants to cancel them out too. So what happens? Price then goes into the stop loss of the sellers. What happens? Price then smashes to go up. And that's exactly what the market has done. Exactly what I showed you up there. This is exactly what's happening. And this is happening live in the markets right now. Okay. And I can show you multiple examples of where this happens. And that as soon as price hits and cancels out buyers and sellers, it reverses and goes into the other direction. Let me show you over here as well. This is the opposite way. So look, we have orders right here, resting orders right here. That's a low. We have a high right here. And look what happens. High, low. Okay, well, a lot of sellers are trying to sell right here. That's what the market's going down. Guess what happens? The sellers, where their stop loss at, stop losses, there's a lot of resting orders here. And price has to take that out first. What does that do? Price takes that out. Boom. As soon as it takes it out, where does it go? It goes straight, fakes out all these buyers saying, hey, buy, buy, buy. Everyone's buying. Everyone's going crazy like the market's going up. This is where everyone's buy orders are. And as soon as that happens, what happens to the markets? The market's like, psych. The market doesn't want you to make money. So what does it do? It goes down here and it goes into the direction it needs to go. And then you can see it just reverses and it just crashes down and it goes in the direction it wants to go in. Okay, this is very, very important. You see this and you visualize this because this is what we need to see. This is the concept that we need to see. So when it comes to this, and I'm going to explain to you in the next video the advanced setups of and just deep diving more into liquidity. But to just go over the basics real quick so you don't feel confused, liquidity are resting orders that the market has, highs and lows basically. And these resting orders is where most people are going to be placing their buys, their sells, and their stop losses. Remember, stop loss is also an order. If you have to come out the market, let's say I bought, for me to come out the market, I have to sell. Okay, so that's why there's buy orders and sell orders. Now, the market tends to, this is a pattern that we notice, the market likes to, if it wants to go in a direction, it will cancel out the buy orders and sell orders because it's waiting for a big move. That's what it likes to do. So, for example, over here, price is giving us sell order, boom, 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 sell, 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 sell. Said, okay, no, actually, a lot of people are out here. There's stop losses are out here. There's a lot of buy orders here. Let's go collect that real quick. Okay, we're collecting the buy orders. Okay, now we want to go for the big move. That was the big move. Boom, price tanks. Boom, a lot of money made. So when we're trading, we actually want to be in this big move. We want to trade in this big move. As you can see, we don't want to be in these small little moves because you're not going to make that much money. We want to be in these big moves. I'll even show you another one right here. This is actually a really, really good example as well. Low, high. Look at this, right? Price crashes down. Sell, sell, sell. Okay, so a lot of sell orders right here. What does price do? Price then says, you know what? There's a lot of buy orders right here, stop losses. Okay, there's a lot of buy orders. Let's go take them. Let's go collect them. Price goes, collects them. Says, psych, actually, no, we need to collect these sell orders as well. Look what price does, collects the sell orders. And then what does price do? It goes in the original direction, the big boy move that it needs to do. Do you see how price is collecting those sell orders, collecting them orders in, taking as much money as it can from the public, and then it decides to distribute all the money to the people that actually got the move, which is this right here. So in this move right here, you can see, okay, we created highs, created lows, created highs, created lows, created highs. But in this case, as you can see, who would have won? Obviously the buyers. But in that process, buyers would have got stopped out with this move right here. Sellers would have got stopped out with this move right here, canceling out all the buyers and sellers. But because we're going to become geniuses in the markets, we understand that. And so we just wait for this to happen. And then we see the big fat move that happens in the markets, which is liquidity. Okay. Now, tomorrow I'm going to explain to you exactly how liquidity is and how we're going to start noticing liquidity and go deep dive into it a little bit more. But what I want you to do for homework is I want you to show me liquidity levels where price has hit it, collected the orders, and then reverse. So for example, here, this is a low. Price hits it, collects them sell orders, and then reverses. That's what I want you to start noticing within your eyes. Okay, I need you to recognize this pattern. So do it as many times as you can. If you need to rewatch this video a billion times, rewatch this video to understand this concept, because it's very, very important. And what I want you to do, every time price hits a level, a liquidity level, right, the resting orders, every time it hits that and reverses, so like for example here, it hits it and it reverses and it goes to the other direction, that is a liquidity level that you need to recognize. So as soon as you go on the charts, that's what you want to see, and that's what you want to recognize. If you do this multiple times, this is going to help you recognize liquidity levels, but not only that, it's going to help you recognize area of interest, interested areas where you could possibly start making money in the markets and actually start seeing things in a better way so that you can start making money so you don't get trapped, right? Most traders that don't understand liquidity, most of them get trapped in the markets. Like I said to you before, the market likes to collect the orders in, collect as many orders in before it distributes the move. With you, you don't want to be part of the collection. You want to be part of the distribution. You want to be part of where the market wants to go. So if you're part of that collection, you're going to lose money. But if you're part of the distribution, you're going to make a ton load of money. And that's what you want. You want the markets to give you money rather than take your money. Okay? So be aware. Just to kind of recap of exactly what we spoke about today. Liquidity are resting orders. Where are resting orders? Resting orders usually lie around highs and lows. Okay, just above highs, just above lows. Now, what are resting orders? Resting orders are buy orders, sell orders. Okay, what can buy orders and sell orders be? They could be entries, they could be exits, they could be a stop loss. That is what the orders are. Every time you press a buy or sell, that's an order. Every time you get stopped out, that's an order. Okay, every time you exit the trade, that's another order. Now, when you are trading, you need to understand that the market, you can't just buy every time it breaks a high, every time it goes above a high. We can't just buy. We can't be, that's a simple concept, and it breaks and it gets ruined every single time. You don't want to be them type of traders. What you want to do is you want to wait for price to collect in the orders. So let's say we're on an uptrend, we're waiting for price to collect in the sell orders. Why? Because that's where a lot of people are going to get faked out, fake sells. Okay, then what we're going to do, like for example here, buy, okay, boom, fake sells. Right here, fake sells. Price is telling sellers, oh, go down, go down. Nope, psych. This is going to be liquidity. Obviously, we're going to talk about tomorrow, but we sweep that liquidity, we collect all the sell orders, and boom, we go back up. That's the move that we're looking for. So this would be an example of what I would want to see from you, from your task, okay? This is exactly what I want to see, exactly what I want you to start identifying. And then once you start identifying this regularly, you're going to become such a pro at understanding where the market's going. Because like I said, liquidity is what determines where the market is going, higher highs, higher lows. Also, it determines where all the orders are. It's very important for you to know where these orders are and where they're kept and where they are resting. Because if you don't know where the orders are, you're basically buying at blind sides and selling at blind sides. You don't want to do that. You want to buy and sell exactly where everyone else is buying and selling. However, you want to be smart and wait for all the orders to get collected, and then you then activate at that distribution level. Okay, so I'm gonna leave you guys. If this didn't make any sense, rewatch this video a few times, comment down below what you've learned, and let me know once you've done the task. Also, make sure you guys leave a like on this video, save this video so that if you ever get confused on liquidity, you can rewatch this a billion times, and turn that bell notification on. I'll see you guys tomorrow.